I'm sorry to tell you, but if you trade ICT or SMC, you don't trade liquidity. Ask yourself, how many people do you know that trade support resistance and all that retail stuff? And how many people you know that trade SMC or ICT? I would argue there's way more people that you know that trade ICT and SMC. So if there's a majority of people trading the same way, then how are y'all the top 1% traders, for example? How are y'all following the liquidity and making sure that you are along the smart money moves? The actual smart money. So here in this example, you can see you got this wick and these relative equal highs that took liquidity here and then make change a character, break a structure, whatever you want to call it. And when it come back, it gave you some reaction and then tagged you out. If we go on a higher time frame, we have this high that made this beautiful wick to liquidate this high right here, and it went down, and now it's coming back to test it. You have some reaction, but now beginning of Asia, no, well, not beginning of Asia, end of Asia, beginning of London, is gonna tag you out. So SMC and ICT became so popular now that everybody's trading it. So if everybody's trading, the market has to give a lot of traps. Back in the day, I would argue, yes, you'd have some liquidity, some support resistance, for example, some break, and then price would go your way. Fine. But what happened nowadays is that price will give you a change of character as a trap and then run it again. And then you're going to think, oh, we're actually still bearish. Let me put this order block here, and then we're going to run it again. It's a whole bunch of traps, but you just got to remind yourself that once we break liquidity, everybody's watching it. Just wait. We're going to take it again, and boom. Then we follow up. I'm always talking about this, but it's a complex topic that most people are always asking me, how do I identify smart money traps? How do I know I'm not placing myself in one? It's a complex subject, guys, I know. It took me some time, but as soon as I started adopting it, I'm not lost, but I started to not take many positions that would end up in losing positions, alright? I know my English is kind of fucked, but my knowledge is here. Just bear with me. This is scriptless, this is just going off knowledge, and English is not my first language, so chill the fuck out, alright? And yeah, boys, if you want to see liquidity get taken these spots, they can be valid, but you gotta trade them on the spot. You can't just wait for price to give you a whole big change of character or break a structure for everybody to see it, and once everybody sees it, it's gonna get ran. I mean, in here, it didn't. But if you check on lower time frames, you just trap everybody, and this is fucking... Oh my fucking god, bro. Sorry about that, guys. What the hell? Oh, there's an alert here, I don't give a fuck. Alright. But as you can see, it tested once, it tested twice, low wick to make a trap. And why? Because here, you can see how it took liquidity here. Alright, and then they give you a breaker structure. And this is what I'm telling you about. It's giving you a breaker structure, and then it runs the liquidity again. This is how you had your little stop loss on. Because, yeah, it's fine. We're reading previous buyer section, and you might say, I would never place myself here. I would know that this high is the one. But once we're in the present, you would place yourself here. You would place yourself here with your stop here, and you would get stopped out. You don't need to lie to myself, you just need to check your journal, if you actually got one, and see if you're losing yourself in these kind of setups. Alright? You just have to check if, once the liquidity gets taken, and you see a breaker structure, and you place yourself, you have to check if we're running it again, and then we're actually following your move. Because we all know, if we get stopped out, and then price runs our way, we just were part of the liquidity. If you don't know where the traps are, if you don't know where the liquidity is, guess what? You're the liquidity. So in my channel, what I'm trying to teach you guys is to spot the liquidity. It's know where it is. And liquidity can be anything. Alright? Not just support and resistance, trend lines, anything. Smart money traps, previous daily highs, previous daily lows, Asia liquidity, Asia liquidity session, sessions liquidity. You can check my video about the session secrets. A whole lot of value in there. Most people will charge you for the type of content, but I'm giving you the sauce for free. So please just leave a like and subscribe. But yeah, guys, as you can see, there's also liquidity cycles. All right, we take out the lows, take the highs, to take something underneath, and then to take it back up, because we all know price doesn't move like this. All right, with highs and lows, lower highs, lower lows. All right, it does to some sort, but it's not this beautiful thing you're trying to tell me it is. Because if it were this, I would just buy here, buy here, buy here, and guess what? We would all be millionaires. But market isn't as simple as that, because once we go to it, we open the chart and it's some bullshit like this. So how do you trade this? Seeing the lines? The lines isn't for me to know if it's protected or not. The lines are made for me to see the price taking them. Right? As you can see, boom, liquidity, boom, liquidity. This made it equal low, gone up, tested this, boom, liquidity. Then went up, liquidity. This inducement, boom, liquidity, run up. Here, liquidity, 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 from inducement to inducement. All right? And when I was going to in my previous point, price doesn't move like this, and it's certainly not with breaker structure, order block, breaker structure, order block. I mean, you're gonna get fucked. So this is also liquidity, and if it's also liquidity, boom, took this low, and now it has fuel to run. That's how I teach how price moves. All right? It's not how you want it to, but it's something like this. Boom, 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 boom. All right, this looks way more realistic once you come to the market than some type of this shit. But this is also a trend line. So you're trading like this with an order block right here, but you're not seeing that this is all trend line, and that's supposedly against your argument of against your logic of liquidity, right? Because you have the trend line here, and that's liquidity supposed for you, and then you're gonna get ran, and we're gonna run. You all know that. Where do people put their stop loss? On a basic argument, we'd say in the highs and lows. And every single high and low, people are putting their stop loss, right? Here, 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 something like that. So this is fucking pissing me off. Get off here, man. What a. So if every single high and low, people are putting their stop losses there to some extent, it means they are liquidity. And if they are liquidity, you're gonna see price taking them out. For example, here we run. Wait, I'm moving like a newbie here. We run, we run, we run. Then mitigation, we run, take. So like that. It's easy for you to talk now with a previous chart. I mean, you can go to my Discord. It is free. I might, that's what I'm saying, might still give you the analysis on it, but you always checking me, putting out these lines and seeing them to get taken, and predicting the moves most of the times, right? And then if we get a trade in them, we might trade them. It's not just because I know price is going down or up, then I'm gonna trade it. No, I'm gonna simply wait for my liquidity to get taken, and then if we get something here, then I might short it. All right, but this also took liquidity. So, and even this, so we might expect some liquidity cycle here, because this took liquidity, now we take this liquidity, now we took this liquidity that previously took liquidity, now we took this one, now we took this, but it's also relatively high. And now the question is, will we come here to test it and go down, or will we come here and then go down, or maybe go somewhere along here to the 50%? It's questions we gotta ask ourselves, but we don't need to know the exact spot where it's gonna go. We just need to wait for it to go there and then trade the move. Because a lot of y'all might be good. You might spot the liquidities, but then you have two liquidities in the same spot. Alright? Imagine price is here, you have liquidity here, and you're thinking that price is gonna do this and then do this. The thing is, you have two liquidities, and it's also valid for price to do this and then do this. And so you're gonna try to trade one of these moves, because you know price will go here or here. But brother, the best way is just wait and see what price does. So then if price goes here, you know there's a liquidity here, so now we took the cause, gotta go chase the effect. And the effect will be another liquidity. Because what I try to teach is that price moves from one liquidity to another. And that's the whole point of this video. So I know it's kind of fast, I know it's kind of scrupulous and all over the place, but that's the main message here. Price goes from one liquidity to another, right? And you can't just base yourself on simple shit like this. You're gonna get fucked, right? So try to understand it. Go to my channel and watch all the fucking videos. I mean, not just all the videos, 2 to 3 times. I mean, you don't have to see the lifestyle where I just check shit, right? You can just check the trading videos and you'll get good. I promise you that. So hope you like it. Stay safe and peace out, guys.